What if I told you one of the most stable companies in the world is trading near its yearly low? Today, I'm going to break down why I think ADP is a massive opportunity right now. I'll give you a full analysis, my price target, and explain the risks you need to watch out for. Plus, we'll talk about the two ways you can invest in the giant BlackRock and why the smart money might not be so smart after all. Stay tuned. Let's start with ADP. This company is a silent giant. They are the world's largest provider of payroll and human resources software. Think about that. Their services are absolutely essential. A company can cut marketing or travel, but they can't stop paying their employees. This makes ADP's revenue incredibly stable and predictable. ADP is like the plumbing of the business world. It's not glamorous, but absolutely nothing works without it. Their real power lies in high switching costs. Once a company integrates ADP systems, it's incredibly difficult and expensive to leave. It's like trying to change the foundation of your house while you're still living in it. This is why their customer retention rate is over 90%. That loyalty is a massive competitive advantage. On top of that, ADP is a dividend king. A dividend king is a company that has increased its dividend for over 50 consecutive years. That's an incredible track record of reliability and shareholder returns. So, we have a stable, essential business with a huge competitive advantage and a history of rewarding investors. And right now, the stock is trading near its 52-week low. My analysis, using a discounted cash flow model, suggests the stock is undervalued, and I have a price target of around $400. That's a potential 9% annual return just from price appreciation, not even counting the growing dividend. Of course, there are risks. A major recession could slow their growth, and like any tech company, cybersecurity is a constant concern. But given the quality of the business, I believe the current price is an attractive entry point. This kind of stability is rare. If you want to discover more companies like this before the market does, make sure you subscribe to the channel so you don't miss any updates. Now, let's talk about another giant, BlackRock. A lot of people think BlackRock owns the world. That's a myth. They are an asset manager, an intermediary. They manage other people's money. There are two main ways to invest in them. First, you can buy shares of BlackRock itself with the ticker BLK. You'd be owning a piece of the manager. Second, and much more common, is to invest in the funds they manage, like the IVV ETF, which tracks the S&P 500. This way, you invest through BlackRock to own a piece of the 500 largest U.S. companies. Speaking of the S&P 500, we've seen a lot of volatility lately, especially around inflation data. But volatility is the price we pay for returns. The market might jump up or down on a single day's news, but it doesn't change the underlying trend. And I believe the trend for the S&P 500 is still up. Investor fear is low while the market is at highs, which is actually a bullish sign. Also, the old idea that retail investors joining the market is a sign of a top is outdated. Today, retail investors have better information and cheaper tools than ever before. This is a permanent shift in the market, not a temporary craze. Speaking of permanent shifts, there's a huge one happening with money itself, and later, I'll tell you why Bitcoin could be a major part of it. Let's quickly run through some other market news. Ford is crushing it, with strong truck and SUV sales exceeding expectations. Google is quietly developing its own powerful AI chips, which could be a huge boost for its cloud business. And Deckers, the owner of Hoka and UGG, dropped over 13% after its earnings. When a quality company drops that much, I see it as a potential buying opportunity to investigate. Now, about that big shift in money I mentioned. Throughout history, every fiat currency, money controlled by a government, has eventually collapsed. Why? Because politicians can't resist printing more of it, which devalues the currency. Bitcoin is different. It's limited to 21 million coins, and no government controls it. As trust in the traditional financial system erodes, assets like Bitcoin become more and more attractive as an alternative. So, to recap, the big opportunity I see today is ADP, a stable, high-quality industry leader that is currently trading at a discount. But as always, this is not financial advice, so do your own research. If you found this analysis helpful, hit that subscribe button to stay ahead of the curve. What do you think? Is ADP a buy right now, or are there risks I'm overlooking? Let me know in the comments below.